Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be going through certain important topic of financial accounting, one of them being bank reconciliation statement. Now today, we are understanding this specific chapter with a specific cause of being how the financial transactions, the financial reports that have been saved can be utilized in a specific manner if we have found certain errors and if we find out that the balance between the cash book and the passbook, which is held by either of us and the bank, has certain differences. So what happens if there are certain differences, and how do we resolve those differences in order to ensure that the cash book and the passbook tallies at one point of time, which helps in making good decisions in terms of any future requirements or in terms of any past records that we need to handle. So we'll be studying the meaning, needs and importance of a bank reconciliation statement. Let's start with that then. So today we'll be understanding and we'll be going through certain important terminologies of what do you mean by cash book, what do you mean by passbook, and how we need to resolve the differences between the cash book and the passbook. So let's first understand with the specific situation where we have a specific person who needs to withdraw certain amount from his bank account. So he sends a specific person of his accountant firm to withdraw certain amount from his bank account and to ensure that the amount is paid to one of his client. To one of a certain reason, he finds out there is a balance withdrawal which has been already done and there is less balance as compared to the withdrawal that is supposed to be made. So what he needs to do in such a situation is something that we'll understand right now. Let's go with that. So if you can see in this specific sum, we have Mr. A who is the owner, we have Mr. X who is the branch manager, we have ABFC Bank being the bank of the account holder or of the owner. We have a situation here. We have balance as per the owner which is supposed to be 6 lakh rupees. So Mr. A has balance in his account of rupees 6 lakh. What we need to understand is we have a certain situation here where Mr. A, the owner, has sent his manager to withdraw a certain amount from his bank, which is rupees 50,000. However, as per the branch manager's confirmation, there is a balance only of rupees 30,000 in his account. Now, the owner of the business is started to find out that how the balance, which as per his cash book should be rupees 6 lakh, is showing as rupees 30,000 in his passbook. Now, the reason here, what he needs to check is where is this difference coming from. So what he does is that he approaches his chartered accountant. He went ahead and goes with his chartered accountant's confirmation that he needs to find out the bank reconciliation statement. This specific statement will provide him the details of what are the transactions he has mentioned in the cash book and what are the transactions that have been mentioned in the passbook. There is a pretty much information which has been available in the passbook and which seems like had been missed out as compared to the cash book balance. Hence, there is a difference as per the cash book transactions and per the passbook transactions. So, when we talk about the cash book and the passbook transactions, this is we need to understand where this difference is coming from. Hence, once we get a difference or once we find out where the difference is, we'll be able to tally that Mr. A has 6 lakh rupees in his cash book and the same balance should be in the passbook as well. In case if the balance doesn't tally, that means there are certain errors which have been made and which has to be rectified either by the bank passbook or either in the cash passbook. So any of these passbook needs to have the specific information what the owner is looking for. Hence, when we talk about the bank reconciliation statement, this bank reconciliation statement will help us to resolve the specific issue or the specific situation whereby the difference between the bank passbook and the cash book is somewhere around 5,50,000. So, to understand the situation, we'll be going through our next topic, which refers to the reasons what we have for bank reconciliation statement, or the reasons where we find the difference between the bank reconciliation statement as per the cash book and the passbook. Thank you for watching eKida. Keep subscribing to eKida.